Welcome everyone to today's webinar with Mazuma. My name is Ben Sutton. It's good to be with you. I'm of course an accountant and one of the founders here at Mazuma, where our goal is to service small business owners with tax and accounting needs that they may have, answer questions, provide information, also do the nitty-gritty bookkeeping work for you, as well as prepare and file your tax returns. Today we are going to be discussing the tax deadline and how it's coming up, and maybe some last minute things you want to do to be prepared for that. But also, before we get into that topic, I wanted to just bring up the latest legislation related to the PPP loan terms for forgiveness. Congress kind of went back to the drawing board a little bit and decided to extend the time that you have as a business owner to use the PPP loan funds for payroll and thereby receive forgiveness of that loan that you received. So previously the PPP loan, you received it and then you had 8 weeks to spend that money on payroll, rent, and utilities. Now you've got 24 weeks. So it's a nice big open window there to use that money for those things and receive forgiveness. Previously, you were going to be required to spend at least 75% of the money on payroll. Now 60% of the money must be spent on payroll. So 40% can be used on rent and utilities, which is also a nice benefit. So those are the two main things that I wanted to point out of the new legislation that just passed this week. So if you have any additional questions about the PPP loan, feel free to throw them in here, and we'll get to those at the end of the webinar. So as we all know, the tax deadline was extended from April 15th to July 15th. It's caused us accountants quite a stir here in extending our tax season quite a bit. But it's been great for the small business owner. So a few things that you'll want to keep in mind now that we're getting close to that July 15th deadline are things that you don't want to miss, right? Things that you want to have together and ready for either yourself to prepare or for Mazuma to prepare for you, or any accountant to prepare your tax return. If you've got a business, that means the bookkeeping has to be done. If you had a business in 2019, then there has got to be some effort going into recording all of the business transactions that occurred last year, aggregating those, summarizing them into an accounting software or an income statement of some kind, so that that information can be prepared and placed on your tax return. Okay, so a lot of times business owners will get to this point and it's the deadline for filing the tax return is coming up, and they don't realize that the bookkeeping, the reconciliation of all of the business transactions needs to be done before that tax return can be prepared. So someone has to go back, account for all the business activities, summarize that, and put it on your tax return. So start now if you haven't already gotten that bookkeeping done. And of course Mazuma is here and available to you to go back to prior years and do that bookkeeping piece for you. Once that's done, then the tax return can be prepared and filed. And as we know, as I've mentioned in some of my other webinars, I'll just throw this out for you for your benefit here. If you are a sole proprietor or a single member LLC, then your business activity is going to be reported on Schedule C of your personal tax return, your 1040. Okay. If you are an S corporation, it's going to be filed on Form 1120S. If you're a multi-member LLC, meaning more than one owner of an LLC, then it's going to be filed on Form 1065. All of those forms need to be prepared and done before you can finish your personal tax return. Okay, so we got about a month to go till the deadline. That's barely enough time to get the bookkeeping and those other returns done so that your personal tax return can be done by July 15th. As you approach Mazuma or any accountant, or even if you're doing your own tax return, the best starting point is last year's tax return. All right, so it's kind of, I wouldn't say dangerous, but it's just not smart to go in and have someone new, or for you even, to begin preparing this year's tax return without knowing what was on last year's tax return. That's why at Mazuma we're always asking for last year's tax return. So then we've got a record of what happened last year, and we can be sure that we don't miss anything that occurred or that was relevant to your tax situation that was reported on last year's tax return. Now, new things come up all the time, but they're easier to remember, right, because they happened just this year. But things that apply to you from years past may be harder to remember. We've even had people, come to us and want us to prepare their tax return for the first time. They have lost their prior year tax return or chose not to provide it and forgot to tell us about a child that they had. And so we didn't even report that on the tax return, and because they missed it, they forgot to tell us that they had a child, and we didn't have last year's tax return to verify the dependents. So always go into the current year with at least knowing that you or whoever's going to be preparing your tax return has a copy of the prior year. The next item that has been throwing a wrench in things ever since the healthcare legislation, 5 or 6 years ago, has been the Form 1095, specifically the Form 1095A. That is a form that reports the premium subsidies that you may have received from health insurance if you get health insurance on the marketplace. That form reports all of the subsidies you've received, and those subsidies need to be reported on the current year tax return. The IRS is going to ask you to pay them back if you haven't, if you earned a different amount of money than you thought you were going to. Or if you earn less money than you thought you were going to, they might give you more subsidy. But they will not accept and process a tax return for you if you haven't put that 1095A information on the return. Okay, and for some reason this form is getting lost. I don't know if the insurance companies or the marketplace just isn't sending it out very timely or what, but it's a regular occurrence that we're filing tax returns that the taxpayer doesn't know that they're expecting one of those. The IRS rejects the tax return and says, hey, you didn't put the 1095A health insurance information on there. So don't miss that, and be sure to provide that or report that on your tax return as it's being prepared. Next new one that is coming up this year that is in regards to virtual currency. So Bitcoin and all these other virtual currency markets have grown, and it used to kind of be that you could fly under the radar. They weren't very regulated or monitored, but the IRS is now cracking down and monitoring virtual currency more than it has in the past. And the virtual currency platforms and marketplaces are maybe not up to snuff when it comes to reporting taxable transactions to you. So if you you may find yourself having to go on to log into your virtual currency account online and pull a report yourself to send to your tax preparer so that they can report those transactions properly. If you don't, you can expect from the a letter from the IRS, because the IRS is requiring virtual currency companies to report to them now if you've had significant transactions. Along with that, 1099s in general. So sometimes small business owners get lots of 1099s, 1099 MISC specifically, and they kind of just pile up and can get lost and shuffled, and we can lose track of them. However, it's important to provide those to your tax professional so that they can ensure that all of the income that you've received is being reported on your tax return. It's the worst to receive a letter from the IRS a year later, right? This is when you can expect this letter, a year after you filed your tax return, and they say, hey, you didn't report $10,000 of 1099 MISC income on last year's tax return, and we're assuming that you don't have any other deductions, so we're just going to slap you with a $3,000 tax bill. You know, so that you weren't expecting, comes a year later, all because a 1099 was missed. So as the deadline approaches, be sure you kind of get that information together, and that you don't miss providing that to whoever is going to be preparing your tax return. All right, so with the July 15th deadline, we all know that that's the deadline to pay and file your tax return. You can still file an extension to file your tax return in October. So it used to be, you know, you'd file an extension in April and you'd get 6 months, and that'd be October 15th. So now we can file an extension in July 15th and extend our tax return filing date to October 15th. Yeah, so that's all I've got as we approach the tax deadline. If there's additional questions that you may have, please go into the Q&A and send us your question, and we'll make sure and get to those. So we've got a few questions sitting here for us, and the first one is, where do I find forms to submit my quarterly taxes? Is it done online? Great question. So quarterly estimated payments, assuming you're not talking about quarterly payroll taxes, quarterly estimated payments don't require a special form. Actually, you can just go online. If you Google IRS Direct Pay, and you create an account there on the IRS website, if you haven't already, they're going to ask you all kinds of information to identify yourself. But once you've got that profile set up, that account set up with IRS Direct Pay, and it is an IRS website, it's a irs.gov website, you're going to go in and say make a payment, and you're going to identify a payment as an estimated payment, which is the form 1040-ES. So you'll see that as an option, 1040-ES, and you'll choose the year for which you're making that payment. 2020 would be the year that you're making estimated payments for. And then you go ahead and put your bank information in and submit those yourself. So yeah, those are done online. You should be making quarterly estimated payments if your business is earning significant income, taxable income, and you know you're going to owe taxes at the end of the year. By making those quarterly estimated payments, you'll minimize any late payment penalties that the IRS could charge you if you wait until the end of the year. So great question. Hope that helps you. Next one, what do I do if I don't have receipts for my business expenses? This is actually not a problem. So the IRS allows you to take deductions for any business expense that is normal and regular for you as a business owner to incur. So if I go and swipe my card for business expenses, I deserve that deduction on my tax return even if I don't have receipts. Okay, even if my documentation isn't perfect. I do have documentation in my bank statement, hopefully, right? So I can always look in my bank statement and see the business transactions. Ideally, you have a business bank statement set up that's dedicated to just business transactions, but even if you're commingling with your personal funds, you could go through there and pull that information out. all of that is still deductible even if you don't have receipts. Okay, these days most of the information on a receipt is shows up in the bank statement. The only time when additional documentation would be necessary is if the IRS was auditing you and they came across something that looked like it might be outside of the normal expense that your type of business would incur, right? So if I decide to go on a cruise and for some reason write that off in my business, there might be a justifiable reason for doing that. But since that may not be part of my normal everyday operation, I'd want a little bit more documentation about that activity. All right, so go ahead and take the deductions. Okay, we got a long question here, and I'm going to do my best to skim and summarize it here. Not filed my 2019 tax return yet. Started a new business with no employees in October of 2019. Incurred startup costs. No revenue yet, creating a loss. I received payment for services in 2019. Sorry, I received payment for services rendered in 2019, but received the payment in January 2020. I'd prefer to be a cash basis taxpayer. In order to be eligible for a PPP loan, I have to accrue the January 2020 revenues on my 2019 Schedule C, which would then reflect income that exceeds the amount of maximum annualized income for the PPP loan. Wait, so I get this, which would then reflect income that exceeds the amount of maximum annualized income for the PPP loan. I prefer cash basis. How hard would it be to file Form 3115 to obtain permission to change accrual to cash? I think, okay, so I like your plan. Filing the Form 3115 is not terribly difficult, and usually it's a quick approval from the IRS, especially since this is your first year. I would think, in your second year when you file the 3115, it would probably be just fine to get that change approved from accrual to cash. I agree with your desire to be a cash basis taxpayer. That's usually best for keeping the taxes as low as possible, for small businesses anyways. But you do want to be able to qualify for the PPP loan. So if they're requiring a 2019 Schedule C to get the PPP loan, then I like your plan. Accrue that income on 2019. Make the change next year. I see no problem in that. All right, what's the best way to keep your books? Well, I'm biased. Obviously, signing up with Mazuma is the best way to keep your books. We have you link your bank accounts in our accounting system, and then we do all of the categorizing and reconciling for you in our accounting software. So everything you spend or receive into your business bank account, we're going to capture and do the bookkeeping for you. And then you have an opportunity you don't have to go through and do it yourself, but you can go through and review what we've done and check our work and let us know if you have questions, or let us know if you want something changed. Like if we record a Walmart purchase to office supplies and instead you want it to go to props expense, then we can do that. We can adjust. So I'll tell you this, I'm biased, of course, because I'm an accountant. I've got an accounting business, but doing your own books in accounting software, it gives you a false sense of security a lot of times. You feel like you're doing everything right, and then at the end of the year you realize you screwed something up. And the nature of accounting is it's complicated. There's just little rules. There's a lot of it that's straightforward and easy to understand. There's little rules that you got to keep track of and understand what you're doing in the process. So that's we know there's tons of people who would rather do it themselves because it's cheaper and more. So that's why we've tried to make our prices as cheap as possible, as affordable as possible. And we've got the business basic plan that's only $90 a month, where we can still do the bookkeeping for you. So that's my opinion on keeping your books. Next question, I just registered my LLC this year and it's a disregarded entity. I have not yet made any income with the LLC, filed my personal tax returns this April before I registered the LLC. Do I still need to file a tax return on the LLC? No, you don't. So you don't have to file a separate tax return for this LLC if it's a disregarded entity and you did not generate any income. If you incurred expenses last year, then you might want to consider adding those expenses. But if they're minimal and you've already filed your tax return, then I'd say don't worry about it. And no, you don't have to file anything else for the LLC. Next one, for state taxes, do they have their own filing dates other than the federal date of July 15th? Some states do. So you'll do a quick Google on that and say, you know, California income tax filing deadline, is it July 15th? And they'll tell you there. So some states did not go to the July deadline. Next one, what if I didn't make any money this year, just started my company April 14th, 2020? So no need to file taxes for 2019, which is what we're filing right now, right? So the tax returns we're filing right now are the 2019 tax returns for all the activity that happened last year. If you started your business this year and you started transacting and spending money or making money this year, you don't have to, you just want to get the bookkeeping going so that the record keeping and the reporting is happening throughout the year. But you don't need to worry about doing taxes for that activity until after the end of 2020. Okay, next one. On the PPP loan, is the 60/40 loan forgiveness available for sole proprietor and Schedule C filers as well? Yeah, I'm pretty sure that it follows, because before they followed the same payroll standard, you know, where it's just in the Schedule C world, your profit is your payroll. So they followed the same rules before, and it's going to follow the same rules now, just with the 60/40 split. Okay, next one. I've already filed my personal tax returns and have received the federal and state refunds, but I started a single member LLC a month ago after I filed my returns. Do I need to file anything for the new LLC, although there's no money generated? No, you don't, since you just organized those this year and didn't make any money. Next one, which IRS publication should I review for acceptable versus unacceptable expenses? Off the top of my head, I can't remember the name of that. But if you Google IRS ordinary and necessary business deductions, right? My guess is that'll take you straight to, and maybe one of our guys here could Google that for us, but my guess is that'll take you straight to the publication that would address the ordinary and necessary deductions. My business is a veteran-owned business and I don't have to pay franchise taxes. Awesome. The business was formed in 2019 and it generated zero income. Do I need to file federal income taxes? If you are an LLC and you did not generate any income and don't have any significant expenses to report, then no, you don't have to file a tax return for 2019. If you have significant expenses to report, you might want to consider reporting those on a 2019 tax return, because that can lower your tax bill this year. So it can the losses from a business, even if you have zero income generated, any expenses incurred can decrease your W-2 income or any other sources of income that you might have. Okay, next one. How many businesses of your own can you have under one LLC? So you really, an LLC is one business, but that doesn't mean you can only do one thing. in that business. Does that make sense? So I can be a landscaper and form an LLC for my landscaping business, but if on the side, in addition to that regular landscaping work I have, say I also cut people's hair. I cut grass and I cut people's hair. I can run that income from both sources through one LLC. Okay, you're not really restricted by an LLC as far as how much business activity you can engage in. Under that LLC, you can have DBAs, which are doing business as names registered with your state. So you can have multiple names registered under one LLC using the DBA. That's the cheapest and best way to operate under more than one business name. And so there's really no limit per se of how much business you can do under one LLC. The thing to be aware of there is that your LLC, the liability that you're exposed to maybe in all these different businesses is consolidated under one LLC. So if your goal with the LLC is to separate liability exposure from the work you do as a landscaper and separate that from the work you do as a salon owner, then you'd want separate LLCs to separate the liability exposure, meaning if someone came and sued you because you screwed up their lawn, you wouldn't want that to impact your other business. And so if there's concern over that, you'd have a separate LLC for each one. Otherwise, you can get multiple names and do lots of business under one LLC. So the other thing to be aware of is that all that income and all the expenses, if it's flowing through one LLC, you want it also to kind of flow through one bank account and credit card account so that all that activity can be reported on that single LLC. Okay, I hope that helps. Next one, is it too late to pay into a SEP IRA for 2019? No, it's not. You've got until the tax deadline to pay in. And you've even got until the extended tax deadline to pay in. Next one, does your team specialize in blogging business and taxes? Every time I talk to some accountant or attorney about blogging, if I have a question, 5 different people give me 5 different answers. I never know what is right. Not many understand the world of blogging. This is a spot that we've actually gotten into quite a bit. I've gone to conventions and seminars and conferences and put on tax presentations and for bloggers specifically. So yes, we are as on top of the blogging issues as anybody. You will find different interpretations of the questions that come up with bloggers and other creative entrepreneurs like that, because the tax law is still fresh and new. So there hasn't been a lot of IRS cases or litigation around these new industries. So, but we have a pretty solid precedent that we've set with our clients and the way we've been doing things. In Mazuma, we've been doing bloggers since we started 9 years ago. Never had an issue with our blogger clients. So we've never been audited or had any problems come up with the IRS based on the way we've treated blogger business expenses and such. So, next one, I have just registered my LLC and I only have expenses. I don't make any money yet. Do I need to file my taxes? If you registered your LLC in 2020, then there's no need to file taxes until the end of the year. So I would if you registered in 2019 and you started having expenses in 2019, then I would say yes, you need to file those 2019 taxes, but don't worry about it. Just worry about the bookkeeping for now, and then the tax return will need to be prepared after January 2021. Next one, when do you file quarterly taxes versus yearly taxes? So quarterly taxes are estimated payments. Assuming we're not talking about payroll taxes, quarterly taxes are estimated payments that you make on a quarterly basis, April 15th, June 15th, September 15th, and January 15th for 1 year. And I know those aren't quarterly dates, but for some reason those are the deadlines that the IRS put out there. And the idea is that as a business owner, no one is sitting over your shoulder watching you and withholding your income taxes from you and sending it to the IRS like they are if you were a W-2 employee, right? So since no one is withholding those taxes from you and sending them to the IRS throughout the year, the IRS wants you to make those payments on a quarterly basis to get your tax money in throughout the year. They're not willing to wait until the end of the year to get it all. So, but that said, the penalty for waiting until the end of the year is pretty small. So your yearly taxes, the quarterly taxes are estimated payments. The yearly taxes is your actual tax return that kind of reconciles the whole year and determines whether you have a balance due or a refund coming back to you. Okay, so yearly taxes are due usually April 15th of every year, March 15th or April 15th, depending on your business structure. And then quarterly taxes are due, like I said, they're estimated payments that are done on a quarterly basis throughout the year. Next one, I just created my LLC on January this year. However, I generated income last year through my e-commerce stores. Can I still file 2019 taxes under this newly created LLC? I am also full-time employed and would like to file my taxes separately. So if you are the only owner of that LLC, then it is going to be reported on your personal taxes the same either way. Okay, whether you report under the LLC or as if you didn't have an LLC. So if you are the only owner of that LLC, then you should report your taxes for 2019 on Schedule C of your 2019 tax return. Okay, so like I say, that's going to be reported on your personal tax return, Schedule C, your 1040, regardless of when you created your LLC, if you are the only owner. Okay, so if you're not the only owner and you created that LLC this year anyways, last year for 2019, you're going to be reporting on Schedule C no matter what. So there's no real good way to actually keep your taxes totally separate as a single member LLC, because a single member LLC is a disregarded entity for tax purposes. So you can't file two separate tax returns in that situation. All right, next one, pro bono and or volunteer work. What is the recommended manner to track or capture those types of write-offs? Should I create an invoice for myself when I perform this type of work for ease of bookkeeping? The bad news here is that technically you don't get to write off services that you perform on a volunteer basis. You only get to write off the expenses that you incur in the process of doing that pro bono or volunteer work. Okay, so there's no such thing as a deduction, whether you're talking about a charitable contribution deduction or a business deduction, for services rendered. So that's just out of the goodness of your heart and charity work, and maybe promotion and building the common good and relationships with others. So there's not going to be any write-offs for that, unfortunately, unless you incur cold hard cash expenses. Next one, I had a legal name change first and last. It has been updated on all official documents and documented in the Social Security and the DMV and everything. My LLC was created under the new name, but my SCorp has not even updated. The SCorp tax has already been filed with the old name. I haven't filed my personal taxes yet. Is that a problem? Probably not, as long as your Social Security number didn't change. If the SCorp return was filed with your old business name, like your old name. It sounds like you're talking about changing your personal name. So if your old name is on the SCorp tax return, but you've got the same Social Security number, I don't really see a problem with that. Just make sure the SCorp is updated next year when it gets filed. Next one, PPP loan. This is the first time I am hearing that. Oh, well, I'm glad you're hearing it then, because in brief, to be brief here, the PPP loan is basically the small business stimulus program that the government started as a result of the COVID-19 shutdown. So if you were doing business prior to February 15th, and you generated income prior to February 15th, then you would be allowed to apply at your local bank through any local SBA lending bank for a PPP loan that is based on how much profit you generated or based on how much payroll you paid during the prior year. So if you fit that profile, you were in business, you were generating money, you did pay payroll, or you generated a profit, go check it out. There's still funds left, my understanding, in that program. And so it's a loan that you get, and as long as you spend the money on payroll or on paying yourself from a sole proprietorship, then you don't have to pay it back. So it's one of the best deals that's ever been offered out there. We recently wrote a blog about the PPP loan, so check out our blog posts on the website and you should be able to find some more information about that. Next question, it is my hope that my business yields enough to allow me to leave my current employer. Awesome. How do I still make contributions to Social Security when I cross that bridge? Okay, great question. Very thoughtful question here. So as we all know, as a W-2 employee, our employer is withholding Social Security and Medicare taxes from us and paying them into the government, and we get credit for those Social Security payments that are made on our behalf, right? In hopes that when we retire, something will be there for us to receive, as we begin collecting Social Security. And you're right, you don't want to just stop paying into Social Security, or else then you might lose your benefit. When you go into business for yourself, let's say as a sole proprietor, the government still will charge you Social Security and Medicare taxes. They just do it in the form of self-employment taxes. And those self-employment taxes are accrued or charged when you file your personal tax return at the end of the year and report your business activity on Schedule C of your personal tax return. Okay, so Schedule C is prepared. It shows how much profit you earned from your business, and that profit is subject to income taxes, just like all of our income is. But it's also subject to self-employment taxes, which is an additional 15% and represents the Social Security and Medicare taxes that no one is there to withhold from your paycheck now that you're in business for yourself. So if you're planning on replacing your income and you've got a single member LLC and could be generating, 30, 40, 50,000 or more dollars in profits from that single owner LLC, you're going to have a rude awakening at the end of the year if you haven't been planning for that self-employment tax bill. There's a couple things you want to consider. SCorp Structure is one. I'm not going to go into the full details of that, but you can check it out on in your boot camp. There's a great video. If you log into the portal, click on boot camp off to the side. There's a great video on understanding SCorps and how that can help you avoid the self-employment hit. the only other thing you can do is plan for it. Okay, if the SCorp structure doesn't fit your needs, then the sole proprietors need to be aware that that extra 15% on their profit is coming, and do everything you can to get it down, but what you can't get rid of, prepare for. Okay. What if I filed my personal tax return before filing my LLC tax return? So your LLC tax return does need to be filed before or with your personal tax return. So you need to amend the personal tax return and add that LLC information onto it. So amending a tax return is not, the end of the world. We do it all the time for people. It's a little bit of a pain this year because the IRS is shut down with COVID and they're way backed up. So it's going to take like 6 months probably before the amended returns get processed. But that would be the solution there. Can you apply for the PPP loan if you haven't filed taxes yet? Yes, you can. But they might want you to have a Schedule C from 2019 prepared and ready to deliver to them. But you don't have to have filed taxes yet to apply or qualify for that loan. As a solopreneur of an LLC with no employees, do I still qualify to apply for the PPP loan? Yes, you do. That's one of the amazing things about this program. It's a stimulus program that really has been a real boon for a lot of businesses. Okay, I think we're at the end of our questions here. Oh wait, we got one more coming in. In regard to the PPP loan, guidelines state a new business may calculate income as derived from January 1st through February 29th. Have you heard any guidance as to what defines a new business? Yeah, so that would be, well, I don't know like hard facts, but basically if 2019 is not representative of your business activity because you started doing business, say, in October of 2019, then you're not going to go back and use look at 12 months of 2019 and find the average income, right? Or maybe you're a super seasonal business where when you're looking at a whole year, it doesn't represent your average activity. So so they have allowed you, those businesses that maybe started in January of 2020 or late 2019, to look at January and February as to determine the average monthly income instead of looking at the whole 2019 year. So your local bank should, in these cases, I always would recommend finding a local bank to deal with. If you go online and apply through some of these larger platforms like Bluevine or PayPal or some of these merchant processing companies, there's no person considering your situation, and they'll just like reject. If all the ducks aren't perfectly lined up in a row, they don't have a good system for accommodating even the circumstances that are outlined in the legislation, right? They have to build rules into their system because they're processing thousands and thousands and so many applications every day. But if you go to a smaller local credit union or something like that, maybe you have a relationship, they're much more likely to make sure that your application comes through and gets processed properly, with all of the considerations being made for your situation. Next question, last one here. If I signed up with Mazuma to file my tax return, can you help me prepare to apply for the PPP loan better? I imagine at that point you'd have, we can answer your questions about the PPP loan, whether we file your tax return or not. It would be easier for us to help you and make sure that all the information is there. But I imagine you should be able to get the same result whether we prepare your tax return or unless you know, people preparing their own tax returns sometimes miss out on things. So I guess I would like to think we get you in as good a position as we can to get your application for the PPP loan accepted. So, but aside from filing your tax return, we can answer questions that you may have too. So with that, we'll go ahead and wrap up our webinar. You can ask those types of questions to our accountants here at Mazuma USA by sending an email to questions@mazumausa.com. Oh, you probably won't get a reply if you're not a client, though. Sorry, that's for paying subscribers of Mazuma, obviously. So, you know, our clients have access to accountants. We're anxious to help them. And if your last question, you know, was related to, if you're not a subscriber of Mazuma, we probably wouldn't be able to help you much. But we are here to help, and we want to help you, and so feel free to subscribe to our service. It's a monthly fee. As I mentioned earlier, it's affordable. It's as affordable as anywhere that you'll find to get quality accounting services. We do these webinars monthly, these kind of deep dive webinars into certain tax topics. We do them once a month. We also do Q&A webinars twice a month, and our clients are always invited to attend those. Someone asked about pricing. You can find the pricing on our website. Is the Business Basic Plan on the website right now? So you'll find the Business Plus plan is $180 a month, which includes the bookkeeping, tax advice from tax professionals who can estimate your tax liability, talk about all the ways that you might reduce your tax bill. It also includes your personal and business tax return at the end of the year. We have another plan called the Business Basic Plan, which includes quarterly bookkeeping and one tax return at the end of the year for $90 a month. Okay, so hopefully that helps you. Check out our website or give us a call if you'd like more information about that. Next webinar will be in mid-July. It was great being with you all. Hope you have a good day. Thanks.